Hello, Stephen Koukoulas here, Economist in residence at Zagga, and Happy New Year to everyone. Let's hope 2025's a fantastic year. I think it will be. Look, for the economy, we've got a confirmation of a few of the things I've been going on about in recent times, and that is the very high probability that finally interest rates will be cut during the course of this year. We know that inflation has fallen, it's back within the target range. That's something that the Reserve Bank were keen to see. We do know the economy in a macroeconomic sense is still very sluggish. Economic growth is 1% or a little bit less actually. And that's feeding into a concern that demand for labour, things like job advertisements, is falling. And even though the labour market's really resilient at the moment, unemployment's around 4%, we have seen wages growth coming back. So all of those inputs, if you like, into the decision about interest rate cuts is something that the Reserve Bank will consider in the first half of this year. So get set for a couple of rate cuts. A couple of things happening globally, which are important, is that there's been a lift in global commodity prices. Now, you might think, well, why is that important? Why is the price of copper or zinc or these sorts of things important? Well, it's not just those. It's a lot of agricultural products. Energy prices have jumped in the last few weeks. So at the end of the day, we've got this commodity price cycle, which does feed into goods inflation, logistics inflation, so the cost of moving goods here, there and everywhere. And that sort of fed into what's also happening in the US. Of course, the Trump administration about to take office, and they're going to be imposing tariffs, aggressive cuts in company taxes and these sorts of things, which the market is seen to be inflationary. So we've had this backup in bond yields over the last couple of months. We've got US interest rate expectations being scaled back, and indeed it's a 50-50 proposition whether we'll get any more rate cuts in the US, and that feeds into the global economy. That said, there are still rate cuts expected in New Zealand, Canada, the UK, Eurozone, and the US is sort of playing its own game now for all the obvious reasons. Other big issues on housing. Through the course of last year, I called a bit of a stealth recovery in housing construction. We know the construction sector was under the pump for the last year or two, cost pressures, labour shortages and the like. But, an important but, we have had a trend increase in the number of new dwelling approvals over the last 8 consecutive months. Now, month to month it's a little bit volatile, so if you put a trend line through, the number of new residential building approvals is up almost 20% from the low point at the beginning of 2024. Okay, it was a very low point, and that was a really miserable level of construction activity at the start of 2024, but an upturn's an upturn, and maybe, just maybe, the government's policy reforms, the agenda to try to get to 1.2 million new dwelling constructed over the next 5 years, I don't think it's going to happen. But if they get close, we've got to get an upturn, and that's starting to happen. Lower interest rates will help. The other thing that's occurring too for housing, which is not yet a problem, in fact it's just the normal cycle in house prices, is that they're falling. We've got house prices dipping in Melbourne, Sydney now. You've also got slower growth in what were the boom cities, Adelaide, Perth and Brisbane. So I think a combination of just a bit of fatigue from buyers, demand is cooling off, the immigration numbers are slowing down, and there's been a big jump in new listings. So look, many moving parts to this economy right now. Bottom line is growth is still weak, but it'll probably edge up a little bit, still be quite a soft year for bottom line economic growth. The housing sector will look a bit better with construction starting to pick up. Inflation's low, and get set for these interest rate cuts. Not a lot, just a couple through the course of this year, but a little bit of interest rate relief for borrowers, whether they be householders or the business sector. So I look forward to chatting at the next Zagga event, and in the meantime, good luck and, as I said, Happy New Year for 2025.